markets were really dead. Then what's up, everybody? Welcome aboard to Bubba's Daily Update. And here we are, 2 football winners in a row. Just want to get that out in the update first. In the meantime, as I sat down the first time to film this for you, it was about 2:05 Eastern time, and the markets were dead flat. I got tired of looking at them, and I said, there's nothing going to go on. However, there's a very big move coming. And of course, the minute I sat down on the chair to tape this, the markets exploded to the upside a little, not exploded, but the S&P ran about 8-9 points. Dow rallied about 60 points. And now things have calmed down once again. What I'm saying here is that there is a very, very big move coming. Now, you can see the markets are on edge. We've seen pretty much on a very quiet nothing day since overnight, we've had about a 300-point range in the markets. And what does that mean? It means that you're seeing this consolidation phase whipping back and forth, looking for a way to break out. Now, we believe it'll break to the downside, and it's a hard call to make this time of year with the Santa Claus rally. We know Trump's going to meet with President Xi over the weekend, which could resolve things. But again, I think a lot of that's kind of priced into the market to begin with. I don't know that there could be really great news that could come from there. I think it could more be better news. So it could be bad news. You had last night, after the markets closed, you had Trump say something about tariffs, and the markets fell apart. In the meantime, we've rallied all the way back. So I think what it says to me is the street does not really put much stock into that this trade war is going to continue on. We hear a lot of the whining and the crying about how it's affecting, and you can see U.S. Steel's down today and some of the other stocks. At the end of the day, again, I don't buy into it. I think this is more of a way for companies and places to raise their prices, blaming it on the tariffs so that they don't have to take the blame themselves and increase their bottom line. We'll see how that trades out. In the meantime, the markets were very whippy. The Russell is very, very weak, which is not a good sign if we're looking for a bullish market. The S&P today has been the strongest, the Dow moderate, and the NASDAQ has been slightly the strongest. But it has been up and down big, even in the last hour or two. So again, there's a lot of things telling us that the markets are on edge here. And what I would expect to see is a very, very big move. And I'm saying, 2-3% in the next couple of days. Now, I could be up. I think it's going to be down, but I would not totally fall. I might lose some money, but I wouldn't fall off my chair if it did go higher. But I'd be looking to sell the rally either way. And that's what I'm looking for, is a spot to sell in the rallies. We've talked about this. We went through this with crude, where they finally forced us to puke the first time. We were able to get back in. And of course, crude is down now 30%. It looked like this morning it was going to run down and break that 50 level. But once again, off the 50-30, it popped. But in the meantime, it's still down, and it looks really ugly. A little concerning about gold, but gold did come down to one of my support levels we wanted to buy, which is around 1220 basis March gold. And of course, it's hovering right around there right now. No big deal. Again, we're long gold. I think gold is going to go higher. The dollar is trying to break out above that 97 and get a solid close above new highs. I think that's going to be the case. And I think that the dollar, and I don't think I would worry about the dollar relationship to the other dollar sensitive commodities or gold, because at the end of the day, okay, when the dollar was at 88, nothing was rallying that much either. I think that we can accommodate another, up to par before the dollar becomes an issue. So I look for the dollar to go higher. Grains were, again, opposite of yesterday. Soybeans were strong, up about 14 cents. Wheat was weak, down about 7 cents. Sounds like a reverse of yesterday. And corn just kind of in meanders, up a little bit on the day. Bond market up a little bit, maybe a little bit of a flight to quality, kind of with the dollar. We all worry about the flight to quality, the flight to safety trades. Remember, the U.S. dollar is still a flight to safety, very much like gold is. So they can go up together when we look at it. In the meanwhile, markets are just really, really quiet, which is not a surprise. Okay. Again, when you see last week's volume compared to this week's volume, last week in a holiday week when nobody was around, volume was about 50% higher than it is this week. That just tells me that this is just a weak attempt at a dead cat bounce. We saw the weak attempt in oil, which failed. I think you'll see this continue, and I think the weak attempt in these equities will fail. The other thing to be possibly concerned about is the cryptocurrencies. Again, they continue to go lower. Now, again, as I've said, and I want to make sure that we understand this clearly, I'm an investor, I'm in, but I am not in with heavy money. I am not selling, I am holding. Okay, it's either going to be worth something or worth nothing, but I would not take my last dollar and put it in the cryptocurrencies. As I said to you before, if you want to take a shot, this could be very much like the internet of the 90s. You know, the internet didn't go straight up, and I heard them talking about there's a lot of crooked coins. There was a lot of crooked companies in the internet. Again, anytime there's money involved, you're going to find somebody who's going to try to scam it. Okay, you're going to try to find people that drive markets one way or the other. It happens. Okay, the bottom line is if you believe, then you should get in for a little bit. If you don't believe, then stay out. Okay, but the one thing that is holding things back right here is the Federal Reserve and the government trying to figure out a way to get their fair share out of a free market. And that really is what it comes down to, is a true and fair free market, which the Fed does not want. That you'll hear Powell speak tomorrow, and we're all worried about what he's going to say. But the one thing that the Federal Reserve does not want is a fair and free market, because that takes away their ability to lessen the dollar and can continue to devalue it, so that we have to work 30% higher to make more money, but live the same standard of living we lived 5 years ago with more money. It doesn't make sense, but that's why you're seeing this constant pressure on the cryptocurrencies. In the meantime, this is Bubba's Daily Update. Todd Bubba Horwitz. As always, I thank you for being a part of it. Again, very quiet, so we don't have much to say. And of course, I want to remind you that this is being brought to you by my buddy from Gold is a Better Way, Adam Barata, Advantage Gold. Check it out. He'll send you the book for free if you go to bubbatrading.com/gold. And don't forget about our high school investing program if you'd like to help us out. Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Have a great rest of your day. Sorry I don't have better news, but it's just really quiet. Bubba's Daily Update. We'll see you tomorrow, everybody. Take care.